Our next panel is on insurance, how AnalyticsTech ensuring the growth in the insurance sector, basically tracking the role of technology in increasing business automation for insurance. And for this panel, I would like to call on stage, we have a very eminent set of panelists here. KV Dipu, Senior President of Bajaj Allianz General Insurance. A big round of applause. Chirag, Bhojani, Head Data Science and Analytics, ICICI Lombard. Round of applause. Kishore, Khanchandani, Chief Risk Officer, Magma HDI General Insurance. Shweta Singh, Head Revenue Streams, Tata AIA Life Insurance. Then we have Tabrej Khan, Chief Technology Officer, Anand, Rathi Insurance. The pricing of these products, the distribution mechanism, and most importantly, one big challenge is claims processing. So how is technology, particularly on the analytics and AI front, driving these processes? And I'll start with you, Dipu, on this, if you can.
Good afternoon, everyone. Thanks to all of you, who are sitting here and, not at the lunch table, right? Hopefully we give you food for thought. So we were asked, I think, 4 points, in terms of how is technology, driving insurance. He referred to claims, distribution, and a couple of other points. We can just repeat them.
No, it's primarily claims processing is one, but the entire distribution mechanism
that you mentioned,
and the products and the innovations around that.
Yeah. Okay. Now, coming to products, one thing you would have seen, during COVID, for example, when people weren't taking out cars every day, people used to ask the questions, right? I don't go to office every day, but why should I pay premium for a whole year? And that's when, using technology, right? We launched pay as you go, right? So the extent to which you drive, right? That's when you basically pay premium. So that's just one example of a product. Similarly, if you can look at pricing, right? You had the actuary as the original data scientist. And now with so many tools available, he is able to figure out based on loss ratios, based on various factors. So at the back end, technology plays a significant role in crunching the time and also bringing in a lot more data variables. So that's how, pricing has benefited from technology. In terms of distribution, if you look at insurance, typically, how was it sold? It was sold through bank assurance, it was sold through agents. One significant player you see today is e-commerce. And what happens on e-commerce? When somebody goes to buy mobile phones, you sell thousands of mobiles in a matter of seconds. And then if you sell an insurance cover along with that mobile, you're also able to sell, thousands of insurance covers in a matter of minutes. So that's how technology has enabled distribution. And coming to claims, again, I'll just give you one example. The biggest form of insurance in general insurance is motor insurance. Earlier, if you crashed your car, you would have had to, call the insurance company. They would send a surveyor to the site of the crash. He would then, take some time to come, examine the entire extent of damage, submit his report, and the whole process would kick in. Today, thanks to AI, you can crunch that process, and it's live, in my company and in quite a few companies. So today, customers don't need to call surveyors. They can take photographs of the car and upload them using the mobile app, just 2 steps. The AI engineer will go through the images and convey the extent of damage in less than 20 minutes up to certain amounts. The customer gives the consent, the money is transferred. So that's how, across all these 4 dimensions, technology has really revolutionized insurance.
Thanks. So you touched upon basically the use cases for AI across these 4 critical areas of insurance. Chirag, Bhojani, I'll come to you next with the same question in terms of how analytics is being leveraged in all these critical phases of insurance, and where do you see things moving on?
So first of all, thanks for inviting me. Great to be a part of this panel. And again, thanks for sitting patiently. So if you look at insurance, right? Insurance, like Dipu was saying, is predominantly a physical touch industry, right? You go to a dealer to buy a car. That's where you would purchase insurance from, right? Most of us would not bother about which insurance company it came from. You go to a bank, the bank sells you insurance products. Predominantly, the first person that would come to your mind would be an LIC agent, right? For people of, let's say, my generation, there was somebody in the family or some relative of the family who would have an insurance agent, and that's how you would really think about life insurance. So it was a very physical touch industry if you really think about it. thanks to COVID, two things happened. One is people kind of started thinking about purchasing a lot more health insurance because people became more conscious about their health. They started kind of, doing some kind of exercise, focusing on their diet, etc. And they also started thinking about, purchasing health insurance. And the second piece that happened was a lot of digitization happened because of, COVID. At that time, all our panelists here would agree that a lot of claims were passed just, kind of through digital kind of claim forms that kept coming in and so on. So these two things really changed the industry. Having said that, data plays a very key role, going back to your question, right? Analytics, be it any algorithms, whether it is a machine learning model or an AI model, is dependent on a lot of data. And digitization helps in kind of gathering data to a large extent. And, when you start getting data, you have a lot more options to experiment with new kinds of models, right? Dipu talked about on the claim side, motor claims, where, just looking at damages, where a lot of us are able to assess what those damages are going to be. On the product side, I don't know how many of you probably kind of know about this, but we launched a product called Elevate. This particular product is a very modular health insurance product based on feedback that came from customers, based on feedback that came from intermediaries, and kind of a lot of the research that we did. People are looking for very modular products in terms of insurance. So Elevate is one such product where you could buy specific add-ons and covers, which are, from a health insurance perspective. And trust me, I think most of you here would think insurance is complicated. I do too. And, when we look at our own policy terms and conditions, we probably would not even buy health insurance. But bottom line is that, we've tried to kind of, again, make it simpler, make the coverages a lot more simpler. Now, when you're making this modularity, the question comes is, what should you buy? And that's where, we've kind of leveraged an AI recommendation algorithm. It's nothing but a collaborative filtering algorithm, which Amazon uses. When you go to Amazon, it kind of keeps prompting you what do other people which are similar to you buy. So we kind of done that to be able to recommend to people what kind of covers people need to buy, which are similar to, people like them. So based on the inputs that come in, it kind of suggests, a recommendation engine basically suggests the kind of covers that that's the product innovation piece. Looking at claims, right? A lot of, some of you would have kind of have had some relative going to a hospital, and the claims process becomes extremely painful. Primarily because, if you want a cashless, you need to go to the TPA desk. It needs to be approved by the insurance company. Now, what we've done at ICICI Lombard is, once the authorization request comes in, obviously it's an electronic request, right? Which comes with what the diagnosis is, what the kind of length of stay is going to be, what kind of room category the person has opted. So basis that, there's two models that run at the back end. One is an AI model, which kind of extracts this information and is able to determine whether, the policy terms and conditions are met, and whether the admissibility for the claim is admissible or not. The second piece it does is, for that same kind of diagnosis, for that kind of length of stay, for the kind of hospital category and the room category that the person has asked for, what's the adjudication amount that we need to pay out, right? And that's then initial approval that goes to the hospital. Previously, a doctor used to physically see these documents and decide what that amount should be. And it used to be on an average 90 minutes. That, we've been able to condense it to 90 seconds, right? So you get an instant approval SMS on your mobile, which says, your claim is authorized up to this particular amount. So that's just one example on the claim side. I'll take one more minute. From a customer experience perspective, right? I think the Swiggies, the Zomatos, I think have really kind of changed the way we look at things. Nobody wants to call the contact center, right? If you have a problem with the order, all you need to do is just go to the chat and kind of, place your problem. That's kind of becoming what insurance is looking at, right? From a customer experience perspective, they want to chat, right? Whether it's on a WhatsApp, whether it's a website, whether it's, kind of your own apps. We have our own apps as well. So what we've done is we've leveraged the power of, kind of AI there, where it's able to understand the customer intent and queries for kind of either, people look out for their policy documents, People want to intimate claims. People want to kind of make endorsements. So we leverage the power of AI there, including generative AI, where we are able to, again, take the request kind of and fulfill those requests on these chats. And that's something that we've done. So that's our assistant called Responsive Intelligent Assistance, RIA. That's something that, again, all this is, again, built a lot of data. A lot of that has been digitized over the years. And I think the entire industry is benefiting from it because, you're seeing a lot of these innovations across the insurance industry.
Thanks for illustrating with that use case particularly. Next, I'll come to you, Kishore Khanchandani. Your perspective on this, how analytics is being effectively leveraged by the insurance companies.
Thank you. I think data, innovation, technology has really revolutionized the way the insurance industry has been operating. So if I speak from the product perspective, now, there are a lot of avenues or rather points from where you can get the customer information through the social media or IoT. So you can gather a lot of information of the customer. We also spoke about telematics in the previous session where the customer can get a chance to, pay less premium depending on his usage, depending on the behavior. So tailor-made customizations and giving a choice to the customer to select the product and pay premium accordingly as, really being changing the way the insurance has been growing. From the pricing perspective, in one of the sessions, Sonali also spoke about risk-based pricing. So here, for example, if you have a particular territory where you feel that, pricing needs to be tweaked, or rather we want to onboard the customer, but yes, subject to certain amount of loading. So that's also possible. So for example, I'll give you an example of a smartwatch or armbands through which you can capture the information pertaining to the customer and see what's the health condition, accordingly determining the pricing. In case of non-motor for insurance, we have RSA model through which a particular territory, whether it's a cat-prone area or not, so you can determine whether into that particular zone you want to penetrate, and if so, yes, what's the pricing needs to be done. So this way you can utilize. On the distribution, I think many people, most of us are using the smartphones, and as you also mentioned on the Amazon and this week, so no one wants to speak to anyone, but rather at a click of the button, at the convenience, you want to get the things done. So I think that's very important. Customer wants to buy a policy, he may not visit any of the insurance companies, or he may need not talk to any of the agent, but just with a click of the buttons on his mobile application, Zoom, the policy is here. We have the UPI payment which is done, and in a fraction of a second you get the policy on your mobile. So that's the power of technology. And on the claims, I think it's very important and rather a pain point. That's the only time when customer may want to interact with the insurance company. There even the way has actually changed. The customer need not call up the insurance company through the applications or forget the intimation piece, rather the assessment of the claim. So for a particular sort of a claim which covers a large surface area, drones have been used to assess the claims, and through the mobile applications, customer is assisted to click a few photographs from different angles and accordingly upload it. The moment that is done, there is someone sitting at the back end and determining the extent of the damage which is done, and accordingly there are spot payments which are done, there are assisted payments which are done. So that's why it's very easy for a customer, right from onboarding till the settlement of the claim, that all his queries get sorted just at a click of the button. So I think that's my submission. Thank you.
Thank you. Next, Shweta, I'll come to you again. These critical areas, how have you been leveraging analytics to effectively enhance some of these processes?
Sure. I think let me tabulate over and above what we just heard from the gentleman. I think what has been the most revolutionizing aspect of leveraging analytics and digitalization together is the fact that you're able to do a lot of things more real time now. Right from the time of onboarding to risk assessment to underwriting to engaging with the customer as well as servicing the claims, right? Irrespective of which insurance industry we're talking about. The ability to do things more real time is something which has been really a very, very welcome change, leveraging tech and data. And the other aspect of this and connected to this is the ability to shift a lot of your processes to the left, by which I mean that a lot of your risk assessment or most of your profiling and underwriting can be done at the time of onboarding, as against earlier, you will log in an application and then you will start the rest of the process. Today, with data being available from social media and the other fintech partners that we can tie up with and the bureaus being available, a lot of your assessment can be done at the time of onboarding. So that really saves the time. So a lot of shift to the left, a lot of real-time ability has got established, which I think is the biggest differentiator of what this brings to the table. The other aspect is reach. Today, whether we have to reach out to your consumers or you have to reach out to your distribution, the ability to reach out faster, to disseminate, to reach out, to survey, to cascade, to communicate, to engage, has been a lot faster, with analytics being there, with data being available to harness, to respond to the engagements that you're doing, has been a huge change that has been in the last 5-6 years. And that I think has brought a huge shift to be able to change what you want to do in your strategy when you're engaging with your customer, when you're engaging with your distributor, and therefore the to and fro of the information is much faster. So those two, I think, are the most important changes that have happened leveraging data and technology in the insurance industry.
Okay, thank you. Tabrej, your views on this.
Hello. First of all, thank you, APAC News, for inviting me. And I am Tabrej Khan. I represent Anand Rathi Insurance Brokers. So we are a broking company, one of the first composite insurance broker. We take care of general, life, and reinsurance. So coming to technology and data, so at Anand Rathi, what we have done is for our retail customers, we have our own platform called as AR Kavach, right? Wherein we have integrated with the most of top 9 or 10 insurance company, both life, health, motor, wherein customer can come on the platform, select the policy that they want, see the differences, right? And then buy the policy end to end along with the claim servicing. So this is the beauty that we have with technology, that's customer sitting at home and deciding, right, going to the platform and deciding what policy customer wants. He or she is able to compare, right, what they want and whether those coverages are there or not in the particular insurance company, and then go ahead with the policy. Second that we have done is on the data front is data actually really helps in improving efficiency in-house, I mean within employees as well as for our customers. So how it improves is one of the data analytics that we were doing. We identified that we have the data, we created a dashboard for our senior management. Then we identified that there are certain anomalies, right? I mean the data is not accurate. The data that we present on the dashboard, whereas the data that is shared offline with the management, there are differences. So that made us realize that there are scope of automation within departments, right? How the data can be entered real time, then whether all the data is entered or not. So that difference is how that can be identified. So data really helps. So when you create any dashboard, right, so you understand whether the process is being followed or not. So if there are any process gaps, then that is the scope you get and you improve the processes. So there are a lot of scope once you start analyzing data, right? So one of the data that we were working on, the policy and RFQ gap analysis. So when we did that gap analysis, we found that the proposal that we used to create and submit to the insurance company, there were certain gaps, right, when the policy was issued by the insurance company. So that is the project we took, that before the policy actually gets issued, we need to compare. So this was done manually. Now we have automated that, the time it is considerably saved. So immediately as the RFQ or we get the QCR from the insurance company, we do the comparison. And if there are any differences, immediately it is highlighted to the insurance company and that is taken care instead of that being highlighted during claims. So there are many benefits that we come across by having such type of technology. Yeah.
Thanks. So we sort of touched upon some of the important aspects or phases in overall insurance life cycle and how technology is playing a role. A key area, crux that came out of was the customer profiling, the proper customer profiling which is now all the more important in insurance, and to do effective risk management around that customer profiling. So, how is technology helping that? And there is still a lot of, in terms of the quality of data, it's still there is some lacking. So, how do you do a proper customer profiling so that you can manage your risks more effectively? Dipu, I'll start with you.
I think it's a fairly straightforward approach. If you look at data, data quality has historically been an issue because the industry did not have KYC. I'm talking about general insurance. I'm not talking about life insurance. Life insurance had KYC. So literally, you didn't know your customer. And also it's a distribution-led model. Very often you have customers who have never experienced the company, right? If they don't take a claim or if they have not come to the company, their experience with the distributor becomes their experience of the company. So firms, took some measures. One, of course, there was this regulator's move to introduce KYC, which the industry actually welcomed. But then you literally get to know your customer. The other is, in the last few years, there has been a significant shift to, to harness your data to the best extent possible. So for instance, when, I can talk about what we did, when we moved to the cloud, we were able to move from siloed data. Data was residing in silos in various data marts, and we moved to a data lake. So then you have all the data in one place. And once you do that, you can get a 360-degree view of the customer. So that helps when it comes to customer servicing, which are the policies he's taken, the history of his transaction. So that's one way by which, customer profiling is done. Now coming to risk management, right? I go back to the point that I made earlier that while we speak about data science and we speak about analytics, the insurance industry always had the actuary. He was the original data scientist, and he was using intelligence and manual tools. With the arrival of analytics tools, it just made his job that much simpler. Today, he or she has access to a lot of data, and using that, you can get very granular, right? Earlier, if let's say you need to have a one-size-fits-all solution, today you can actually slice and dice. You can pick segments across various demographic and psychographic variables and come out with products which are many more in nature. So I think that way data at the back end, this is not customer-facing data, but data at the back end has really enabled profiling as well as risk management.
Thanks. Chirag, in terms of how has technology ensured more responsible disclosure so that you can manage your risks more effectively?
I think everybody knows about DBDP, right? I think there's a responsibility on all of us. People talk about us being the original data science industry, if you will, right? We've always been collecting a lot of data for us to understand risk a lot better. But with the advent of a lot of data sources that we've been tapping into using external wheels, right? We were the last probably in the financial services industry to get KYC. The general insurance industry was probably the last one to get it, which was obviously a welcome move. But at the same time, I think it's important to disclose to the customer what kind of data you're using and for what, right? And that's an obligation that as an industry we have. I think every industry has to that extent. We also have that obligation. Second, data today is coming in multiple forms, right? It's not just the data that you're capturing from the consumer as part of your proposal forms, as part of your claim documents. But when customers are calling you, right, you're getting a lot of data from what conversations they're having with your call center agent. When they're having chats with you, right, there's a lot of information that they're giving out when they're, kind of chatting with you. At the same time, right, Dipu mentioned telematics, right? A lot of customers kind of today are willing to share their data about their driving behavior, right? And we are seeing a high correlation between driving behavior and claims frequency. So again, that's the data that's coming through. It won't be long when, your smartwatches, health sensor data is going to start being utilized for health underwriting, right? Because we've seen there's a huge relationship between people who are healthier, who kind of followed a lifestyle that's kind of more active, and kind of, their propensity to be healthier and not kind of fall sick. So again, that's the data that's coming through. Image-based data with respect to, your own motor claims damages or, forms that you filled out. So there's a lot of data that's coming through. I think two important things that from a responsible governance perspective, what we've done, one is we have a very clear data governance framework that we've set out. The data governance framework specifies what we do with the data. So there's a clear data usage kind of framework which specifies where are you going to use that data, what you're going to use it for. The second piece which is important is the whole aspect around fairness and trust, right? And how do you ensure that you're being fair to people, right? So as an example, on the claim side, when we are looking at claim rejections basis, data that we are getting through, and the machine learning model that I talked to you about, when we are authorizing, cashless claims request, whenever it comes, the model says that there's going to be a rejection of that particular claim. We don't do it automatically. We move that to a human to ensure that, that there's another set of eyes that's looked at the same case and is being fair. Having said that, obviously, there is a bias in humans as well. You can't take that out. But to a certain extent, you have another set of eyes that's actually looked at the case, made sure that the decision that the algorithm has taken is correct, and then pass it on to the customer, right? So at least we've kind of set up that framework to ensure two things. One, the responsible usage of data and where you're utilizing each piece of data. And the second piece is around, kind of making sure that every team, every colleague that's using data to kind of create models has that aspect of fairness and trust within the ecosystem. So those are two things at least that we're doing from a responsible AI perspective. And you're starting to see a lot of technologies now coming up on the responsible AI side, which help you do this, which help you identify biases, help you identify drift in algorithms. That's something I think a lot of, at least us, are also experimenting on and kind of utilizing.
Thanks, Kishore. Your views on the risk management part.
On the disclosure piece, I think the quality of data has improvised with the exchange and with the concepts of, blockchains, IoT. So it's very important while underwriting a proposal that the quality of data remains intact and unbiased. So getting information has, really helped the underwriter in determining whether the risk needs to be assessed or needs to be loaded. So I think that's one of the key points. Then even from the reporting perspective, analytics of these types of things really help in monitoring the quality of the data and assessing, and at the same time maintaining a record properly. So I think overall, with more and more data being available, better underwriting, and audit trails being in place with use of technology, it has really helped in greater disclosure of certain things.
Thanks. Yes, Shweta.
So I think we can view it from two aspects, right? One is the internal data that we have assembled or captured, and the data that we can explore externally if we was to look at from two different lenses, right? Now, for the internal data, it's very clear, right? There are certain very clear guidelines from the regulators about what all it can be used for and what it cannot be leveraged for. So, for example, for risk assessment and servicing, maybe yes. For a second sale or a pitch, maybe not. So obviously there are very clear guidelines on what your internal data sets can be leveraged for and what it cannot be leveraged for. Similarly, from an external data system perspective, any data that we are trying to leverage upon, whether it's the Fitbit gadgets, which is from a health data perspective, whether it's from financial partners, other than the bureaus, I think for everything else, obviously there's a consent which is required, and we will have the data laws as well very soon. So it's extremely important that there's a very clear disclosure of what information may be leveraged tomorrow when we're interacting with our consumers. Be that while we are logging in the application or while we are interacting, and if we've heard so many times in the calls itself, right? This call may be recorded for quality purpose. So there has to be very clear disclosure of what information is being stored other than the application part, where there has to be very clear specifications on that, as much as what all it can be leveraged for tomorrow, so that there are no surprises. And then, of course, there are processes to manage DNC, etc., etc. Now, this is with respect to what and how it can be leveraged for. So again, coming back to the point, all internal or external data can be leveraged for certain points, provided we've given the disclosures. For certain aspects of your process in your insurance, for certain aspects, it may not be leveraged. However, in a certain banded way, certain guidelines can be given to the various functional teams to use. So for example, if we have assessed, let's say, information about someone's recruitment bureau, one can look into seeing that you're not talking about specific amount, but it can be always be discussed in slabs, right? So those are ways to leverage information a little more hygienic way. And it's very important to see that we are all adhering to these norms and we are not violating, be that any form of data, because of course with the big data big coming in, there is more than the structured data that we leverage today. So it's extremely important that it is disclosed and declared about what all it can be leveraged for.
Thanks. Tabrej.
So we all have data, right? So there are so many data available with all the organization. Thing is that now everybody is moving digital, right? We are omnipresent. We are available on internet, WhatsApp, portal, mobile app, third-party integration. So such digitalization has increased the cyber risk, right? The cyber security. So cyber security is one of the most crucial part in risk management. So start from development, the code that we do. So we have tools available wherein we can check the vulnerability in the code before we actually deploy it into production, right? The code has to be assessed with respect to the vulnerability, because it should not happen that because we have data and we don't do that assessment and we go live, right? Then there is a lot of risk we carry. At the same time, even we have a good risk management at our end, but we do have integration with third-party vendors, right? So we have to make sure the third-party vendor also follows the same framework, right? Cybersecurity framework that we follow. So that assessment is really important, right? Before you get into third-party application integration. So that is a small thing I wanted to say.
So the third party. So we will conclude with 30 seconds to each panelist. One important trend vis-a-vis technology in insurance, or which you are likely to foresee in the near future, starting with 30 seconds to each panel.
I tell you 2 seconds. The obvious one is Gen AI.
So I think a lot of technologies coming through Gen AI is obviously one, but I think it won't be long before you see an AI underwriter, an AI claims adjuster, or an AI customer service representative. So, hopefully we see that in the future.
I think slowly we'll revolutionize and come to a point where, the customer just needs to make the payment and that's it. He need not do anything. His data, his information is already available. He just needs to give his consent. The moment the consent is given, the policy is issued, and moment something goes wrong, the data automatically flows to the insurance companies and the claim is directly paid to the hospitals. I think that's what we can see.
Shweta.
I think insurance is perceived to be a very cumbersome process to buy a policy. I think one of the biggest changes that we envisage is there's a lot of information there on online platforms, in the digital world, in the web platforms. I think harnessing all of that data to make your buying process really a one-click process is one of the things which will happen soon. It's happening in other parts of the world and likely to be here as well.
Yeah, I think it will be Gen AI combination with the virtual reality, and maybe in the future we may hear a word called as green AI, considering the sustainability. That's what I feel.
Thanks. So with that, we come to an end of this panel discussion. And I would request Sanghamitra Mohanty, co-founder and director of APAC News Network, to felicitate our panelists for their role in technology deployment in the insurance sector. And after this, we will break for lunch. So, can we have the KV Dipu, Senior President, Bajaj Allianz General Insurance.
Yeah.
Chirag, Bhojani at Data Science and Analytics, ICICI Lombard. Kishore Khanchandani, Chief Risk Officer, Magma HDI General Insurance. Shweta Singh, Head Revenue Streams, Tata AIA Life Insurance. Tabrej Khan, a CTO, Anand Rathi Insurance Brokers.